time for Lykken on Lending.
Welcome, everybody. Good to have you with us.
Welcome to Lykken on Lending, a weekly mortgage market update providing up-to-the-minute information on interest rates, loan programs, and hot industry news, all related to the mortgage industry. Brought to you by Transformational Mortgage Solutions. To participate in today's program, our guest call-in line is 646-716-4972. Now here's your host of Lykken on Lending, David Lykken.
Let's begin.
Mark Helm, thanks for joining me on this interview. I'm excited to share this with our listeners. You and I, Mark, both have appreciation for a process. And Keith Polaski, who has been a guest on the podcast a number of times before, is one of my favorite people at many levels. But one of the reasons is he, too, is a process junkie. He knows the importance of it, Mark. So I'm excited to have you join, Mark, on this interview.
Glad to be here, David. Thank you.
You bet. Let's welcome.
Mark, pleasure to meet you. Obviously, as David referred to, we've met a couple of times and I've been on his podcast, but pleasure to meet you.
Pleasure to meet you too, sir.
All right, Keith, one of the things that I want to give our listening audience about is a little bit of your background. I don't want to spend a lot of time. You can go down and click on the link in the below that you will be able to listen to the previous podcast. We do a good job of introducing Keith then. But for those that don't take the time to do that, Keith, if you'd give us just a real quick overview of your background. Just learned some things just now that you were a pilot. I love that in the military. So there's so many things about you that are just continue to be amazing.
Well, so thank you for having me on the podcast again. I do appreciate it. It's been a bit since we've had our last discussion. But Radius Financial Group, who is owned by myself and my business partner, Sarah Valentini, started 23 years ago. We are a retail originator. We do not do any TPO or wholesale or any of that. We are, feet on the street, originator, classic IMB who has relationships with realtors, builders, developers. We all know the story, all that stuff. One of the things that we've always been known for in the industry, not that we're, a giant player or a major player, we're a significant player. But one of the things that I think we've always been known for is process implementation and technology implementation. We have a really strong lean towards technology and technology adoption, sometimes for the good, sometimes for the bad, but I can tell you overall, unequivocally for the good.
Yeah, there's no question about that, and you really appreciate that. Your footprint, again, you're based, headquartered in just south of Boston, about 20 minutes south of Boston, but your footprint is mostly in the Northeast, Keith, is that correct?
No, since we've talked last, Dave, Atlantic Seaboard, we have offices in North Carolina, Georgia, Florida, Texas, licensed in California, Washington State. So we've expanded, some of that has just been opportunistic, that we've had opportunities presented to us, and some of it has been strategic. And certainly the Florida, North Carolina, Georgia stuff on the Atlantic coast has been places we wanted to be. And then the others were opportunistic, and we said, let's do this.
Well, it's good to see you growing, and it's not surprising. One of the things that I want to start the conversation off with is that I celebrate is that you do have which you've already talked about, is you have an appreciation and a deep appreciation for, a passion for, even is probably a better way to put it, for a process that you said when we first met, Dave, I think we're doing everything the way we want, but we need to have someone come in here and confirm what we're doing. And more importantly, identify and map out what we're doing, and then we want to have a process where we continually do process improvement. I think it's known as Kaizen and over there in Asia. But you have been a champion of this and very passionate about it. And it started with Alice Alvey, myself, and you retaining me in our firm. And then I brought in Alice to work with me, as well as another individual who, and we came in and we were embedded inside of your operation. I've got some wonderful pictures from that time. It just seems like just yesterday. I can't believe it's that long. But I want to talk about, number one, there's something that many mortgage bankers struggle with, Keith, and that is this. They don't appreciate the importance of having a consistent, replicable process and being disciplined about it. What is it that made you so passionate about this and have the conviction that you do?
Well, I think it first started with, again, back to the technology lane. We were on the cusp of automation, whether that be RPA, robotic process automation, AI, at the sort of forefront of that. And the reality is, if you don't understand your entire workflow and map it out, it's not possible to wring out the efficiencies that will drive down your manufacturing cost.
Yep.
And when you and I met at the MBA conference, unfortunately, I don't recall how long ago it was.
It was a long time ago. Yeah.
11 or 12 years ago. Yep. We engaged your organization and had you come in and start the catalyst of our workflow project. And that workflow project was arduous. It took us, you and your team taught us how to do it. You didn't stay for the entire time, but it took our team almost 12 to 14 months to get those processes documented and get them workflowed, put them in Visio maps, job aids, all of those things. And without a doubt, that was one of the best investments our company has ever made. And while it was a process that took a long time, we have reaped, without a doubt, the benefits of that process.
Yeah, one of the best ROIs you've talked about is that investment. And I think a lot of people struggle with that. I want to go fast forward to today, right at the moment, and I talk about the rewards of doing that. Your cost to originate is less than half of what the MBA average cost to originate is, if I recall correctly. In fact, I think it's even lower than that. It's close to a third of what it is, if I understand correctly. Could you elaborate on that a little bit? I mean, you may not have to get specific numbers, but it's a lot lower than the industry average.
Yeah, so certainly, the MBA publishes their quarterly cost to originate, which includes loan officer compensation. I think the last metric was 11,800, somewhere around that number. Don't hold me to it. I'm not the subject matter expert on that number. And obviously, I have to pay. We're a retail shop, so I have to pay my loan officers market wages, right? I can't be the first penguin in the pool, even though I would like to. Not that my LOs are going to want to hear this. We'd love to. Lower LO comp, but it's not going to happen, right? So that's roughly half of the expense. So the only game you have is to be able to control manufacturing costs, and that's how we look at everything that we do. Once the originator gives us a loan, it's about manufacturing. When we started this process with you, David. Our manufacturing costs were roughly $4,000 per loan on the operation side. So call it $4,500, $4,000 to the originator, and the MBA stats will support this. It was about $8,000, $8,500 back in those days. And we look like the rest of the market, and we did a good job. And then as we focused on manufacturing, which to me is the only place currently that you can drive costs down, we went from about $3,800 manufacturing So now we're down to $350 to $600 on an agency loan.
$350 to $600 per loan
on an agency loan, and then maybe $1,000 to $1,400 on a FHA, VA, USDA loan. And some of that is because of borrower profile, but it's also because your underwriters that have to touch those loans, they're more expensive underwriters. But we couldn't do any of that without the first process of measuring and documenting everything that we do to manufacture a loan through that process that you and your team started us on.
It was an honor to work with you. And I mean, just celebrate that success. Mark, how do you get this kind of message out? Can you hear that, Mark? I mean, it's just like, it's almost for the average listener listening to this, they're going to go, not average, the vast majority of listeners go, that's not possible. The answer, it is. Your thoughts, Mark?
It is. Let me ask you two questions about your process that you explained. When David's team come in and laid out the roadmap for you, and you started looking at your processes that you'd been successful with, I'm assuming that documentation cycle you went through really helped you build a roadmap for the future to continue to do a self-assessment on where you were and allow you to continue to have an improvement process on your costs. And that's great to do that. But do you keep that in play and you do a self-assessment other than when you add a new branch or other when a branch manager changes out or whatever? Do you keep that self-assessment alive all during the year and check out individual offices and processes that you have to make sure they're staying on target and you're reaping the benefits you want out of it? Or you find that those things just happen a little bit through osmosis because you got a pretty fine-tuned machine, and then when new things came up that going to improve it, you just add those to the mix? Which is kind of the way you do it? Are you continually self-assessing, or are you looking at the opportunistic things as they come up to add to the mix of what you're doing?
If you get stuck in the I'll figure it out when someone else identifies it, you'll lose the game.
That's right.
So we have two people whose primary job is to assist in technology and operations synergy every single day. That's all they do. And most of our technology advances that we do, whether they be robotic process automation or AI, are born from our employees, from our line level employees. So we have a formal process for our operations staff to say, this is stupid that I'm doing this when a robot can do this. Why am I doing this? This doesn't help my brain power. This does not help the company. And this is what they do. And so they will boil that up to our IT/ops liaison. And then they'll go through a process of seeing whether this is something that can be automated, can be improved, et cetera, et cetera. Additionally, our workflows are not negotiable. So
I want to stress that because you made that clear. We are committed to doing this. And I think there's a lack of commitment when there's a lack of success with business process improvement. It's really a lack of commitment to that. And I want to underscore what you just said. And did you learn that as a result of trial and error, or just say, no, I realize that and we laid down the law? And have you lost some people over that?
So we have lost some people over that, but if anybody's ever had a military background, operations are not negotiable.
Yeah.
You follow operations, end of discussion. No, you have the ability to raise it up to the chain of command, but this is how we do it.
It's not a democracy.
And this is how we do it. And when we bring on somebody from like a major competitor, Movement, Wells Fargo, so David, you'll like this. We have a new word called AWE, A-W-E. You know what that means?
No. What?
After Wells exit.
That's so good. Stand in awe after Wells exit.
Right? So you can't bring in people from movement. You can't bring in people from wherever G-rate and think that they can bring their platform to your organization.
Mhm.
That doesn't mean, however, you have to be so arrogant that you can't learn from them. And if you do learn from them, then we'll change our own workflow to these new realities that make sense, right? So you have to have an open mind and be a listener. One of the problems I think most people in this business have, especially in the IMB world, is that they're not listeners, they're only talkers. They only want to say, this is the way we do it. And so you cannot ever improve your organization if you're not a listener. You have to be a listener. But you also have to recognize that not everybody has the truth, right? So it's not a democracy.
That is exactly. And you're talking about listening, but that sometimes it has some discernment, Keith, on what are you going to act on, because you can listen and have a number 5 messages come in as to what the way there is to do that. How do you sort through that as you're listening to the way that it's going to be?
So when I was younger, David, I thought that I could be the only listener, at least on the operations side. You know, my business partner, Sarah, you've met her.
I know her. Yes.
And she's on the sales side.
Yep.
But when I was younger, I thought that I could be the only listener. As I've gotten older and the company's gotten more mature, it's to make sure that you have people surrounded around you that are better listeners than you are.
Right. Yeah. Yeah, that's really good. I think listening is probably one of the most important. Keeping yourself open-minded to other ways of seeing it. And
so there's a joke in my office, David. I don't want to interrupt, but there's a joke in my office. If Keith says no, it's a maybe. If Keith says maybe, it's probably a yes.
That's coming from the sales side for sure. I can appreciate that. Yeah.
Keith, a quick question for you. As you've experienced this growth in your branch scenario since the last time you and David talked about branches and whatnot, how has the adoption process worked for you for the people coming on board? Have they bought into what you're doing? And, obviously you're not going to keep them around if they don't, but have they bought in, and have they come to bear with the team and made sure they get their input in to even make the process better if they see something else you can do? How's that working?
One of the things that we've always had in our sort of DNA of hiring is that we want people to be fully educated about the process, fully educated about the culture, and we want either of us to opt in or out. So that means the candidate or candidates opt out prior to hire, or Radius opts out prior to hire, because it only gets worse 90 days in, right? Yeah. So my money is being spent at the front end, and I don't get a return on investment until these guys are producing, et cetera, et cetera. We try to be transparent. We don't hire perfectly every time, but I'll give you a stat that will probably be disputed by those that might listen to this call. I have not lost a producing LO who has been with us over 5 years in 23 years.
Wow. That's a strong statement.
Not one.
Not one in 23 years. Anyone who's been with you for 5 years. Wow. That's
we've never lost them.
That says volumes about the culture you've created in your company.
Yeah. And the belief in the company.
Everybody strive to do that. That's amazing.
Yeah. And believe me, I have top producers that are getting recruited every single day.
Yeah. Like everyone else. Yeah. Why? What is the key to that?
And they believe, Dave, here's why they stay. They believe in the manufacturing plant. They know this is why it's so important to get your back house in order and not your front house in order, because your salespeople will not leave you if they know, if they originate alone, it'll go to the closing table.
Yeah. Yes. Yeah. That is such an important point you're making there along the way. What are some of your commitment to this? And it's been a long journey, it's an ongoing journey, ongoing commitment and journey. You talk about what you've had to go through. What are some of the major hurdles and resistant points that you've had along the way? And was that most on the front end and that's diminished over time? Or is it something you have to just work through? There's issues that you work through all along the way.
Yeah, so you get tired dogs that don't want to change their ways. So on the front end, you don't get technology adoption where they should get technology adoption. They don't get it. They don't educate their consumers to create a more robust and successful consumer experience. I have some senior originators. I obviously will not name them, but they're still on, manually face-to-face handwritten apps. Like, are you kidding me in this day? You don't understand what that means to the production costs. So to your listeners, and obviously this is why we're having this, we do time and attendance on every single file. So,
explain what you mean by that, time and attendance.
Yeah. So when the loan comes in from the loan officer, and it's actually pre-loan officer, we do time and attendance at the loan officer assistant level. Every time a loan officer assistant or any other employee in our organization touches your file, we document it to the second, and we cross-reference it to the actual employee's salary and benefits. And so we have an exact cost of manufacturing for every single loan and at every single LO producer level. So there are conversations that are able to be had that say, hey, John Doe, your cost to manufacture are 20% higher than the average of our entire organization. Why is that? And we use those for not penalties, but for conversations to try to improve loan manufacturing quality and LMQ, and also whether we should price differently to a specific LO because they cost us more money.
All right.
Pretty simple.
It's pretty simple. I mean, sure, it makes sense when it comes to how you pay in the compensation. There's all the regulations that go around that, some of the fair lending issues that could rise up as a result of that. But the most important part is you're being really intentional and you're managing to the reducing costs, which is, we have got to do that. I think you raise a really good point also, is there's a certain amount of sense that there's sacredness to the LO compensation. Who goes first is the one that's probably going to, and trying to cut LO comp is the one that's going to lose their organization, especially in a competitive market like this where so much recruiting going on.
Oh, no. So Dave, don't give me bad PR. I think LO should get paid more. So have them call me.
Okay, good. Okay, very good. Very good. Well, I think, but there's so many people that are so frustrated by that. So that is really a good point. I mean, I guess I want to come back and say, are you serious, Keith? I mean, there's some highly compensated.
No, so think of it. So think of it, right? So the MBA says it costs $11,000 plus or minus, whatever the number is, right?
Yeah.
Costs $11,000. The reality is the average loan amount is $400,000 plus or minus. So that means LOs are getting paid $44,000 to $4,500. So that means for most companies, roughly $6,000 is the manufacturing cost.
Right.
So I can't go out.
I mean, you're talking about the operation side to make sure we understand that, and we're talking operational origination costs, not
operational origination costs, which includes secondary marketing.
Yeah.
Right? I mean, it includes secondary marketing. It's on the other side. I mean, we got to pay the LOs where we have to pay them.
I count the LO comp.
So I don't think that's a needle that you can move. I think it's a dangerous a dangerous game if you're especially a retail originator. That's a dangerous game to even contemplate. You don't want to be the first penguin in the pool. So there's the only place that you can actually create an opportunity for your organization to be successful is in manufacturing costs. We all have the same cost of credit, or what I call cost of goods sold. We all have those same costs. We all have the same cost for the most part, depending on your size of warehouse bank lending costs, right? So there's not a lot, there's not a lot of differential there. And if you're a pretty solid producer, your executions into the agencies or the aggregators, as long as your product performs, right? If you have historically high delinquencies, and you're not going to get good executions. But all of those things, they're pretty equal. I mean, there's not a whole lot of movement there. So it is, how do I make my organization a more efficient? So we call it velocity and efficiency. How do we create more velocity and efficiency in the manufacturing cycle? And the only way you can do that is through a combination of the things that your organization helped me do. Map out workflow. You taught us how to do it, and then you left. That was so David, so you're aware, and your listeners are aware. You guys were there for 3 weeks, I think, 2 weeks. I don't remember what it was.
It was about 3 weeks. Yep.
Yeah, that took us over a year and a half to get that fully documented.
Wow.
Right. So this. You talk about commitment. If you really want to do this, you need to know every single touch, and we all have to do 1,000 things, roughly, right? So it's the analogy I use. So if you're going to sell into the agencies, you're going to sell into aggregators. We all have to do the same 1,000 things. Some of us do the first 100 in one way, and then the next 100 in a different way. But we all have to do the 1,000. Whether it's 1,000, doesn't matter. Just being, dramatic, right? And then, but we all have to do them. So the question is how do you do them efficiently? And also, what are those 1,000 things that you don't have to have a human do? And if you don't have to have a human do, how do you bring in robotic process automation or artificial intelligence?
Yeah, and you bring up a really good point right there, because some people say, no, I want to be a high touch company where we're talking to the consumer and we have a high touch. In other words, they're experiencing more humans than computers. We have too many people. I've heard people say we have too many computers involved in this process already. How, to those that would say that you are not being as you're missing opportunities to communicate with the consumer as a result of using the bots that you do or the technology you do, that you are actually missing opportunities to communicate with the customer and form a relationship. That's not what I'm hearing you say.
No, so there's two places in that. I would say post-closing, you want high consumer touch. You want to keep the customer in whatever way you can, right? So we've only been a servicer since the last 4 years, and that's been helping us as white labeled. But during the process, customers want immediate gratification. They want immediacy of data and all of those things. And in our opinion, they are very well satisfied with the technology of forward, point of sale that we give them. Maybe your customers track NPS, Net Promoter Score, they don't, and maybe they know some history behind that. But our goal as an organization is a Net Promoter Score of 85, which is world-class, and above 60 is world-class. And we're currently at 79. So our customers are telling us that we're doing a good job. And without a doubt, that doesn't mean that you want an electronic or a digital relationship with the customer. especially in our business. This is,
it's a relationship business.
yeah, think of the things that these consumers and borrowers tell us, right? They don't sit around the Thanksgiving table and talk about what they make on a monthly basis or what their debts are with their families, but they have to talk to that with our LOs and our staff, et cetera, et cetera. So this is an intimate relationship that I think needs to be balanced by technology and human interaction. I don't think human interaction will go away. I don't want to name names, but there was a very large and remains a very large originator out there who's probably not going to survive because everything they were talking about was no originators and only technology. And you may or may not know who that name is, but your listeners probably can surmise who I'm talking about.
Yeah. I mean, you raised a really good point. So here's the question I was trying to get to, and I did a kind of clumsy way of getting to it, was, does technology take away from getting a high net promoter score and NPS? And the reality is you just demonstrated that you're at 79 and still maintaining your cost originated Fannie Freddie loan on the operational side down to $350 to $600. That is an extraordinary feat, Keith. That is amazing. And having the net promoter score. So the guy that's saying out there, well, we can just do less and less, more and more with computers, less and less with people, it does not take away or erase the fact that you can get a really solid relationship with the consumers.
So the thing that I would share with your listeners is think of this for, just as an example. Your borrower doesn't know what the process is to pull a flood cert. Right. They don't care. It's not part of them. If it's an FHA loan, they don't know what the process is to pull an FHA case number, right? That's just behind the scenes. Mm-hmm. So when you can automate that and make that process with no fault, it has no fault, right? So there's never an instance that we forgot to pull the flood cert. And anybody that's been in this business long enough prior to RPA and some automation knows that prior to a close, holy sugar, I'm trying to be respectful, Dave. We forgot to get the flood cert because a human was involved. Yes. That doesn't happen, right? So there are so many places in the manufacturing process that the consumer borrower is not aware of that happens behind the scenes. And if we automate that, they don't experience any less of a customer-focused, customer-centric lending experience that they say this is really good. What they do experience is they don't get sloppy mistakes happening on top of their deal.
Yeah, that's good. That's a really good point. Mark, we got to wrap this up because, Keith, every time I get on with you, I get so excited about it because we share the same passions. And then in the beginning, before we got on the radio, I find out that you're an A-10 Warthog pilot, one of my favorite airplanes, the most amazing airplanes out there. So it's not a surprise that you're committed to a process like the military in your business. Mark, as you listen to this, give us some of your thoughts.
So let's clarify.
Okay.
So I did not end up with my commission because of Graham Rudman.
Oh, yes. Yeah.
Okay. So I was ROTC. I was a ROTC commander. I flew F4s, T-37s, T-38s, and had A-10 flights. But I was not in action or engaged. So I was reserve. And then in Graham Rudman decommissioning, where we lost 30% of the decommissioning, I was pushed out. So I just want to make that a clarification. I'll leave it out of the podcast.
I don't care. I don't care if you only took off an A-10 once or twice and landed it once or twice. Just the fact that you got to fly one of those things at some point in time.
Well, put it this way, David. if we were on a 737 and it didn't seem to be going well, I could put it on the ground.
That's good. That's good. That's so good. Mark, as you're listening to this conversation, I mean, I'd love to get your thoughts on it as we wrap this up.
Well, I'm going to say one thing to Keith. Keith, I'll be glad to share my time with you. And I tell you, it's not all it's made out to be, but I will tell you my time in the United States Army made me what I am today. I don't regret 1 minute of it and whatnot. And it takes all people doing all jobs. And you know that. That's what makes us a strong country as we are. This has been delightful. I love when I listen to somebody that I have such kindred spirits with on so many fronts. I think you built certainly a better mousetrap. And I can't help but let my mind wander and talk about what you could do to concepts like net branches and everything else and just grow your company 50 times larger than you have it today if you wanted to, because what you've done is you laid out a model that probably can work for just about everything in a retail space. And because that's when you're focused, and it's so innovative on the controls you have and the understanding you have and the success you have. It's really refreshing that people have not only gone back to the basics, but they fine-tuned them and made that statement. I don't have to be doing this. Systems and technology can do this for me. AI can do this for me. I don't have to write on a pad of paper. I don't have to do calculations anymore. And I love that. And it just streamlines what you're doing. It's really fascinating. I'd love to have the opportunity sometime to kind of visit your operations and see how it works, because I think you built something mighty special. And I'm sure you are very proud of it, because I'm proud for you.
Well, Mark, I appreciate the commentary, and obviously we would welcome you at any time, and David, any time for a revisit. You know, here's where we're at. I actually tried to commercialize the technology, and I actually had some big players in the marketplace that were wanting to buy our technology. And then 2020 and 2021 hit, and
Nobody
like, we only have so many things we can do. So I'm going to originate loans because I'll make more money originating loans than commercializing the technology and what we put together. You know, at the end of the day, my business partner and I, there's one thing that we're focused on, and it's shared success. And we have committed to our employees to give 25% of our company to our employees based on some criteria. We're not looking to retire tomorrow. We might sell it to a management team. Obviously, we're approached every single day to sell our company, but there's only one thing that matters to my business partner and I, is that those that were along for the ride share at some level in the success of that. For some, life-changing numbers, and for others, you know, numbers that matter. You know, they're at the lower end of the wage scale or the commitment, you know, how long they've been with us. But, you know, we math it out today. Some of our top people will get $4 or $5 million checks. You know, and that's all that matters to us right now is shared success. And that's all that Sarah and I are focused on, is growing the company so that we can have a shared success exit. Sarah and I have done wonderful in this business and in this industry, and many of our folks have been well paid. But at the end of the day, the Lord knows that not every piece of bread is for those that baked it.
Yes.
And that's where we're at.
I'm so grateful, Keith, for you giving us your time today. I'm grateful for you and our friendship, and for the opportunity to sit down with you so many years ago and start what has turned out to be just an amazingly successful experience on cutting costs and creating an amazing culture and company. There's so many takeaways on this. The origination costs $350 to $600 per loan on the originations. I mean, on the operational side for a Fannie and Freddie loan, you have not lost a single loan officer that's been with you 5 years or longer, has not ever left. That's amazing. You talk about being open-minded and being a lister, and then creating a culture of listeners around you that are even better listeners than yourself. There's just so many wonderful takeaways. I hope our audience will take this and pass this around to them. But if people want to connect with you, what's the best way to do so?
My email address, Polaski, KPOLASKI @radiusgrpforgroup.com. I'll be more than happy to talk about how to create manufacturing efficiencies, even with my competitors. I think the more that we take capacity and expense out of the industry, that's better for our consumers. And so I'll be more than happy to do that. If you want to make personal introductions, that's okay as well. David, as you know, I don't do these for ego. I do these to help the industry,
And
help
you
our
have-
company, and help everybody that's in this business, and hopefully make it a better place for our consumers that want to own homes.
Well, it's a shared interest and a shared commitment, because Mark and I are both owned companies, sold them at both 72, and we're doing this not because it's ego, it's giving back. And I love that about you and Sarah and what you guys do. Thank you, Keith, for being here today. I appreciate it so much.
So, David, I want to thank you for the opportunity to speak to you and Mark. At any time that your listeners want to, ring me up, I'm more than happy to have discussions with them. And I think what you do for the industry is really important. And continue your good work. And God bless.
Thank you so much. God bless you too. Thanks so much.
So nice to meet you, Keith. Enjoyed talking with you.
Pleasure.
You've been listening to Lykken on Lending, a weekly mortgage market update with your host, David Lykken of Transformational Mortgage Solutions. Join us next week, and thanks for listening.